Good morning, traders. Scott G with the Simple Trading Life here on a Friday morning, currently about 9:43 a.m. And I decided to go on early today. Typically, we go on later in the afternoons, around 2 p.m., but I do have a bunch of things to do late morning and early afternoon today, and I did not want to miss the live stream. And I thought, hey, we could change it up as well and catch some of the early market action. So hopefully there will be a lot of you that are able to join this morning. Let me bring the comments up on my phone here, and then we'll be able to communicate. We had a really good turnout yesterday. Had a bunch of people on the live stream yesterday, and it says there's several of you in here already, so good morning. And you'll see where I type, where I just said good morning. That's where you would type in any comments or questions you might have. And we're going to jump right into it. I know I said we were going to go live at 9:45, but I got on just a little bit early here. And we'll get right into it, and people can join as they have time. Here's our opening candle for regular trading hours. So those of you in my room, whenever I put RTH, that's what that stands for, regular trading hours. And if we scroll back right here, this was the opening candle of the session for the day. We had our overnight session. So one of the things I want to look at here closely is we were in this long range. Okay, so yesterday we basically ranged pretty much throughout the day. And then even into the overnight session. And then finally, we broke out, retested it here at 7:30 this morning. I was posting in our room, simpletradinglife.com, that we had broke out. Looked like we were retesting. So what this is called a break, retest, and go pattern. Frequently happens. Okay, not every time, because you can see right here, we broke out, and then we just dropped right back into the range, because we hit this resistance area right here. You see I have these areas clearly marked. This morning though, we broke out, we retested the top of the range, and we also have this level here at 3206, and then we went. So that's a break, retest, and go. Then we got up into this third resistance area. Well, I shouldn't say third, it's really the second resistance area. This was a range here. This was resistance area number 1. This was resistance area number 2. This is the second time we're testing it. You can see it was tested early with this wick here, and immediately it bounced all the way down to here, which tells us that there was strong selling pressure at that level. And then this morning, so far, okay, we caught up in here and tested it, and we're selling down. Now, if we can break and hold this range right here, we may look for some further downside movement. It looks like we're trying to do it right now. We're just going to watch this a little bit, and we're kind of going to go through and just watch the action in the morning. If we see any really good potential trades, we'll try to call them out. This one here could have been a good potential trade on the break, retest, and go, and where you would have entered was above this candle right here. Okay, because this was red down into the zone, and then this was a green candle coming back out. So when you take out the top of that, you could have entered probably with a stop underneath the body here. And as you can see, it broke through, then it pulled back a little bit and then went higher. But really, I'm looking here. I'm trying to think where I probably would have had a take profit target. I probably actually would have been trying to take profit like right in here, right at the bottom of this body, which was 32.13. And the top of this candle was 32.0875, so let's say 32.09. So that was a $4, what I would have been looking for, a $4 scalp there. Now it ended up going all the way up to here. Okay, but you would have had to endure this pullback before it went back up. Now, as you can see, price is selling off out of this area of resistance here. Okay, so currently price is selling off. We would look for it to maybe come down and test the 20, which is confluent with our area, our support level at 3206. So we'll watch and see how this plays out. And again, this is opening candle. We are a little over 18 minutes into the first candle of the day. This is the 30-minute chart of the E-mini S&P 500. Okay, ES is what we call it for short. All right, now as it got right here, okay, now this area should, right, even if it's only temporary, this area right here should act as some support. And when I say temporary, I mean we might come down on this one candle, bounce back up, come down, bounce back up, and then eventually get through. Because what would it be doing? It would be eating up the orders below. And let me show you what that looks like. So let's go over here. Okay, this is a trading platform. Okay, and you can see the orders. And if you see here, okay, you look for numbers that are bigger. Now, none of these are really that big. Just being completely honest with you. Even though you see 200 here, and it's kind of eating through it. You see how this is called the ladder or the DOM. All right, now I want you to watch and see, does this number start to get eaten up? Does it start to go lower? It was at 200 and it's in the 180s right now. But again, that's not a big number. I want you to know that. Okay, now it's starting to go down, 160s, there it goes. It ate right through it. Okay, and now we'll see, can it continue on lower? Sometimes you'll get a little bit of a vacillation there or a bounce. What you look for are numbers that are abnormal. So anything I would say 200 or below is really kind of normal. But if you see a level, and a lot of times it'll be a whole number, like 3210. Not always, but you know, normally. If you see a number there that's 500, 600, 800, 900 orders when everything else is below 200, that is an area to pay attention to. Hey, Jose, good to see you. Good to see you there this morning. Jose is in our community. Yes, it is fun. I do like to watch it. I love to watch price action both on the chart and on the DOM, okay, because you can learn a lot. You know, just by seeing what happens with the orders. Now, again, let's just say, I'm making up a hypothetical. Let's just say there was 500 or 600 orders waiting here at 3210. That doesn't necessarily mean that price is going to bounce there. And typically, if it's going to bounce, it actually happens before it ever gets there. It'll get within a few ticks of there, and then it'll start going the other direction. Okay, because there's just not enough people to absorb those orders. Now, if you want to see price really move, again, hypothetically, let's say there's 500, 600, 700 orders waiting here and everything else is below 200. If it gets there and eats through those orders really fast, typically what happens is you'll just see price drop. Okay? Because that's telling you that the sellers are way more aggressive than the buyers. So if you have a level and there's just a ton of orders waiting there and the sellers just eat right through it, price typically just drops right after that. So sometimes when I see a level that's got a lot of orders waiting at it, I really pay attention, and if it's something that I'm interested in, again, let's say it's at 3,200, again, I'm making this up. That's not what's happening here. I just want you to know what to look for. Let's just say there was like 750 orders waiting there, and nothing else it's 200 or below. I might enter or put a order entry a few ticks below that, because I know if that order does not hold, if it fails, that's telling me that the sellers are so aggressive that nothing's going to stop them at that point. So I'd put an order to wait. You know, I'll show you what it looks like. Okay, see that? That's an order, so I'm going to take it off of there. But I could have an order waiting. I could have an order waiting there, and if it breaks that level and price just drops, then because that's what frequently happens, I'll get filled right away, and I can catch that drop, and I can immediately put a stop into profit, and I won't have to worry about price vacillating back and forth on me. Okay, so that is a way. If you know what you're doing, that is a way to take higher probability trades. Now, you don't want to enter before that. So if there was this big number sitting here, you would not want to place an order before that, because if price is going to bounce, it's typically going to happen before those orders get hit or absorbed. So if you enter before that, then you're running the risk of price bouncing against you. Have you seen? Yes, absolutely, Jose. And it does happen. So what Jose's asking about is bluffs in the orders, and that happens all the time. So that is one of the reasons that I don't typically only trade using the orders. Okay, there's a lot of order flow traders or people that say they trade the tape and things like that. This is just one thing that I look at. And it's really a very small part. I'm really looking more at price action, supply and demand, support and resistance. But when I come over here to place orders or to exit orders, I'm going to pay attention to it. So what he's talking about when he says a bluff, there are people, okay, now see this number up here starting to grow, 400 and something. See this up here? That's starting to get bigger. So we'll watch that. We'll see if it either gets absorbed or if price comes up here and then bounces down. Okay, meaning there's not enough aggression to take it out. But what he's talking about is there'll be a big level. And sometimes if it's too big, it almost gives it away. Sometimes you'll see a number and it might be 1,200 or 1,500 orders, waiting at a certain level. Price starts to go up that way, and then all these people are like, okay, I'm getting out of the way. I'm getting out because there's no way we're getting through that level. So they get out. And then what happens is when price gets up near there, all of a sudden those orders just disappear. They get pulled, right? Because it was bigger players, could have been institutions, could have been hedge funds, could have been, just big whales that have a lot of money. They're trying to manipulate the direction of the market. They wanted to get people out of the way, then they pull the orders, and then price goes right up through that level with no problem. Okay, so that's sort of what he's talking about, where he's calling it a bluff, or again, it's people really trying to manipulate what's going on in the market. It's not illegal for, I don't know, again, for retail guys, I can't say this for sure. It's not illegal for institutions to do that. Now, does that mean that they don't do it or that they don't get away with it? Absolutely not, right? They probably get away with 90% of the stuff that they try because it's hard to prove, right? They could just say, well, we changed our mind and we're deciding, we changed our strategy, and now instead of blah, 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 whatever. It's really hard to prove. Now, if they do that over and over and over again, then obviously the SEC could come in and prove that they're trying to manipulate price. So anyway, let's not get too caught up into that. Let's get back over to price action. Okay, I don't see any big orders on the downside here that are in the way. Okay, so if price would start to drop, I would think that it should at least be able to get down into here. Now you see it got down here once, these three candles, okay? So we had this rally, base, rally. This is just short term, right? This is just short term here. And you saw we got there and we bounced, and now we're coming back down again to test this area again. Okay, this big candle leaving this area after this base. We had a decent candle into it, a base, and a pretty good sized candle out of it. That tells us that buyers were aggressive right here when we broke out, retested, and went on this break, retest, and go pattern. So you would think there might still be some there, but that's why I can come over here and look and see, okay, what's down below here? Are there a bunch of orders waiting? Okay, if there's nothing out of the ordinary and price starts to drop, okay, that's telling you that there's probably not as much aggression. Not as much aggression as there may have been when price went up, when this candle was formed here. Okay, I see we got a bunch of new people, so welcome. Everybody, if you could, give us a thumbs up, and if you're new, please subscribe to our channel. Turn on that notifications bell. And check us out in our room as well, simpletradinglife.com, and we have a free chat room. There's a button on the website. You just click on it. Come on in. Everything's free. We post a lot of cool stuff in there every day. We watch the market closely. We have a stock equities watch list every morning. Several people in our room, including myself, trade forex as well. And I'll probably try to show you something here shortly. on Euro USD from yesterday. I'm fiddling around with some stuff behind the scenes. I'm actually trying, and I got to watch the time because I'm going to be meeting up with somebody to work on something later. I'm trying to develop some scans on a different charting platform that may help more highly predict good moves ahead of time. And you'll notice, like, the only indicator I have down here is RSI, and we don't use it in the traditional manner. We only use it to gauge momentum. So, for example, this is telling us that momentum is up right now. Okay, doesn't mean that it won't change, right? If this breaks below here, and really, you know, before it opened, that line would have been kind of up like this. Let me show you, because momentum is starting to change. I'm just drawing it the way it is now, but this is how it would have looked before the market opened. Okay, like that. So as you can see, we are breaking below there. Now, if it continues to break down, then we would start to look for price to break down. If it just turns around and starts to come back up or go sideways, then we would either look for the price to continue in the direction that it was going, which in the short term was up, or maybe consolidate sideways. But what I'm doing on another platform is I'm trying to use a combination of different indicators and tools, let's just call them tools, not to trade on, because I don't like indicators for trading. And I don't think just using them by themselves typically works out very well. I'm a price action trader primarily, and I use support and resistance, obviously, and supply and demand. And that's what we use to actually take our trades and to also pick some targets as well. However, you can use tools to create scans. And that's what I've been playing around with behind the scenes here recently. I was able to kind of last night, and this is very, very early, very preliminary, I was able to kind of use some tools to predict what Euro USD was going to do, and it worked out beautifully. Now, Grayson, my partner in crime, who handles the web stuff and all the tech stuff and does some video stuff for us at simpletradinglife.com, he trades forex almost exclusively. And he was asking me this morning, because I showed him a chart last night before I went to bed, and then I showed him the chart this morning of what happened with Euro USD, and it went right where we thought it was going to go. And he was saying, now, from a purely price action standpoint, would you have been able to make that same prediction or trade the same trade? Most likely, yes. Okay, most likely, yes. But what I'm trying to do is use these other tools to create scans or scanners, however you want to say it, where it will help predict where price is likely to go sooner, so that I can then maybe pass that information on to you guys, or we can even look at new ways of trading. And I don't want to get ahead of myself on that. When I say new ways, I'm just talking about some different strategies that might go along with some swings. Okay, because I know there are a lot of people who like to swing. I don't swing trade as much. You know, once in a while. I took one last week, and I'm not against swing trading at all. I used to primarily swing trade years ago, but I like scalping and day trading. It fits my style. It's much easier to predict shorter moves than it is longer moves. But if we can come up with something, scans, that give us high probability trades ahead of time, and then we might be able to take some spreads on those kind of trades, and those are things that I'll teach in the future. There's all different kinds of spreads: credit spreads, debit spreads, iron condors, iron butterflies, calendar spreads, future spreads. So we may get into more of that in the future. Okay, so here we go. I said at the beginning on this opening candle that I kind of thought if we got below here, price would come down and kind of test where the 20 and the 3206 level is, and here we go. We're coming down. I'm not in any trades or anything right now. It's harder. It's not impossible, obviously. It's harder for me to trade while I'm talking to you guys because I'm trying to watch a bunch of different things. And occasionally I do, right? I could just at any time, right, come over here and just enter a trade. Where are we at now? Let's see. I don't see any resistance below there. Let me come back over. Okay, it's bouncing a little bit. I think it's probably still going to come down here and test, but you know, if I wanted to, okay, I'm in right now, okay? And just if I wanted to protect, I put a stop right there. If it keeps going my way, I can move the stop down. Okay, this tells you where the profit is. If it's green, it's in profit. If it's red, it's in loss. Okay, I'm going to move it down a little bit. All right, so at worst, 25. And I'm going to go ahead and exit. All right, and if I come over here, go to report, come down here, okay, you would see, there it was, 50 bucks, 50 bucks. Okay, so now let's get back here. Right there, we came right to it. You see that? We came right to it. And you can see momentum is breaking down right here. All right, so that's how we use this. We use this as a momentum indicator, not oversold or overbought. And we came right to it. Look at that. 3206.25, and right here is your, it tells you right where it's at. In blue, over here. Okay, so it came right to the 20 and right to the 3206 here. Okay? Does that make sense to everybody? So you guys seen what happened this morning already. Break, retest of this range, go. Okay, that's the pattern. Break, retest, go. Then we got up to this second resistance level. This was the first resistance level, which is these three candles right here. The second resistance level are these two candles, which was a drop, base, drop. Okay, come across here. It was tested once, and it led to this big sell-off. Very quickly. You see that? Barely touched, led to this big sell-off. Now we come up in here. This is the second time, and we get up in here, and we spend very little time there, and we've sold back off to this level right here, which because of these three candles would make sense that we might catch some support. We also have the confluence of this level, 3206, and the 20 SMA. This is all in the 30-minute chart. But you can see how easy that is. All I'm doing is reading price action. Okay, that's all I'm doing. I'm not doing anything else. I don't have any complex system going on. Nothing like that. Let me show you. Give me 1 second here. All right. So this, it's going to come up. All right. This is the one I'm working on right now. This was Euro USD. Now last night, let me see if I can find the chart. Give me 1 second here. Okay, bring this up. Okay, this was the chart that I sent Grayson last night before I went to bed. This was Euro USD last night. Okay. Look at down here, look at all these indicators, and they're different ones, right? This is percent B, this is intraday intensity, and this was the RSI. They were all flat. See this? All of them were flat. Price was consolidating. Price is inside of a channel, an uptrending channel. I've got the Bollinger Bands here. I've never used Bollinger Bands in my life. Okay, I know some very basic things about Bollinger Bands, right? One of the most common, and it kind of goes along with how we trade with price action. One of the most common strategies with Bollinger Bands are double tops and double bottoms. Okay, so the theory is when you get down and you pierce the bottom of the bands, then price leaves and comes back and double bottoms, all right? And it can be a little bit higher, a little bit lower, it doesn't matter, right? And double bottoms that then frequently, and it might not happen right away, but that frequently you're then gonna go back up through the range to the top, all right? And what happened? right here. We went right back up through the range. Okay, so here's the double bottom, right? Here's the double bottom, and we went right back up through the range to this area right here. This is a little supply zone here. We got up to it, we kind of bounced. Right now we're trying to get through it. We're trying to break through it. And as you can see, momentum is now up. Momentum is now up. Momentum is now up. Okay, all these indicators are telling us the same story. So is it likely that we're going to break through here? It might be. Okay. One of my friends who's a professional trader, trades forex and futures. That's where I got the 60-40 RSI from. So he believes, and I know there's other people out there that believe the same thing, that if momentum is up and you're above 60, when you're in a supply zone, you're likely to, one, either break through and go higher, or two, if you see any kind of bounce at all, it's only going to be a small bounce and then it's going to turn around and come back again. So you're not going to get the big drop all the way back down to the other zone, because we have a demand zone right here. That's what this green line is. This is a demand zone. But I put all the factors together last night. Okay, we're in an upward channel, right? We were at the bottom of the Bollinger Bands. Okay, momentum was flat, flat, flat. And we had just double bottomed. Okay, so the likelihood is that you're going to go back through the Bollinger Band range to the other side, and here we are. That's what we did, right? And we still might even go higher. Now, if somebody was going to trade this, right, maybe they entered here, okay? Maybe they entered on this candle because, you know, you wouldn't have seen any of the rest of this. From this point on, you wouldn't have seen this. So maybe they looked at this and they said, ah, it's sort of a hammer looking thing. Let me stretch it out a little bit for you. Okay, this one right here, that's sort of a hammer looking thing. Based on all the other factors, I believe we're going to go back through the range because we just double bottomed right here at the bottom of the Bollinger Bands again. And they enter here. Now, by Bollinger Band rules, you would put your stop below this, okay, right below this. That's a little bit more than I like, right? It's a little bit more than I like, but let's just say somebody did that. Well, they very easily would have been able to ride this out and take it all the way up, and they probably would have exited on the first touch of the opposite Bollinger Band. All right, so let's just look. From here, that's 1384. And where was our first touch? Right here. What was the high of this candle? 14297. 4297. This was 3841. So give me 1 second. 4297 minus, what did I say? 3841. Okay, so 46 pips. Okay, overnight, go to sleep, do a set and forget trade. You have your stop down here. You have your take profit up here. You would have been risking 3690, 38. 138.2, give me a second here. 138.2 minus 136. You would have been risking 13 to win 45. Okay, almost 3.5 to 1. Okay, almost 3.5 to 1. Those are the trades we look for. You know, you want to look for, at a bare minimum, 2 to 1, right? At a bare minimum. If you don't think you can at least get 2 to 1, then you shouldn't be interested. Hey, Grayson, we're actually talking about the Euro USD charts, the one I sent you last night and the one I sent you this morning. But again, I was just kind of finishing up on this. So if somebody would have took this right here as a set and forget trade, they would have had a 13 pip stop with the potential Right here was the first touch. The potential of a 45 pip gain, which is about 3.5 to 1. And those are the kind of trades you look for. So if you're somebody who likes to swing trade, and this was on the 1 hour chart. For those of you who may be new, when I trade forex, I like 4 hour, 1 hour, and 30 minute. I typically do not go below 30 minute on a forex chart. That's just me. I'm not saying that you can't, but that's just me. When I'm trading equities for actual trades, I primarily use the 30 minute and I'll occasionally use the 15 or the 5. That's for trading. For analysis, I'm using the monthly, the weekly, the daily, the 4 hour, the 1 hour, the 30 minute, but I'm primarily on the 30 minute most of the time. Okay? So hopefully that all makes sense. And again, this is just something I'm working on behind the scenes. And at 11 o'clock, I have a meeting with a guy, and we're going to kind of talk about some of this stuff because I want to try to come up with some scans. That's the only and these are not necessarily set in stone. I was telling Grayson last night, I'm gonna try all different kinds of combinations. I might throw a MACD in there. I might throw I'm just making this up, maybe a Williams in there. I may throw in a relative volume, which I probably will. I mean, relative volume is actually pretty important, whether a move is up or down. And I don't have that on here now. This is just what I did for this one particular trade. That's it. Okay, this is the criteria I used for this one trade. And it worked, right? Now, I would obviously have to back test this, over 100 trades to see what kind of consistency there is. Okay, how often does it move? If I have this criteria, how often does it move from this band to this band after this is met? Okay, how often does that happen? Or how often does it go at least 20% on the money? Right, so I'm just making round numbers up. If you had $1,000 in the trade, how often does it go at least $200 in profit? So on and so forth. There's a bunch of different ways you can test it. But I'm going to just use a bunch of different things to try to create scans and see how often. Again, this one worked, right? So I'm 1 for 1 on this one. But I would have to test this at least 100 times to know, is it legit? Is it going to work at least, to me, it needs to work at least around 60% of the time. And if it works around 60% of the time, then that's really good. If it's above that, and these are primarily for set and forget trades. You can also manage your trades. And what I mean by manage, right? So let's say you start with your stop right here and you entered here, okay? And it starts to go up. And you can move your stop to break even, and then it goes up some more, and you can move it to maybe 10% into profit or however you want to do it. That's managing your trade. And then that way, if it doesn't get all the way to your price target and it comes back and it stops you out, it's stopping you out in profit. There's a lot of forex guys, and listen, you do whatever you want to do, but I use stops and I move them. Meaning I always move them into profit. I never move them the other way. I only move them into profit. So I know a lot of guys that if they set their stop right here, they never move it, okay? Because they call it letting the trade play out. So maybe this thing waffles here and then it comes up and it comes way back real close and it goes back up and it gets up here and it comes all the way back down and stops them out. They never made any profit. In fact, they lost 13 pips. To me, I'm just being honest, I think that's foolish, right? If you were let's say this candle right here, okay, because that's sort of a shooting star-like candle. If you're way up here and you're 30 pips into profit or 35 pips into profit, why wouldn't you move your stop at least, say up to like 20 pips or something? Okay, right? Okay, so if you're playing a standard lot, that's at least $200 or, depends on which pair you're playing. So now the minimum you could make is $200. And now if on this candle it reverses and comes down and stops you out, you made money. Instead of the people who leave it all the way down here the whole time, if it comes all the way back down through, you just lost 13 pips or $130 if it was a standard lot. I hope that makes sense to everyone. PSAR, yes, I know a lot of people that use that. That helps them for where they want their stops, like Jose is saying in the comments. He says PSAR are good in combination with Bollingers for trend following. I know several people. I know people who don't use Bollinger Bands, but use PSAR for gauging where to put their stops. So they move their stops based on where the PSAR is. So that is obviously something you can do. All right, let's go back over. Okay, here we go. You see we've been down and price is just sort of waffling, right? For those of you that don't know what waffling means, it's just going back and forth in a certain range. It gets to a resistance or support level and it can't get through it on the first try. Jose says it's good to get the rubber band effect combining the Bollinger Bands with the PSAR. Whatever strategy somebody wants to use, that is totally fine, right? And one of the things that I say all the time is I'm not here to tell you to trade like me. I'm just here to give you basics and try to point you in the right direction. But there are many, many different strategies that make money, right? You have to find what works for you. Now, if you want to trade like me, that's absolutely fine, right? That's absolutely fine. But if you have your own way or you have indicators that you like to use, I'm not a big fan of trading off of indicators and like following what an indicator's strategy says. Very few of them actually work. You know, those, I tell you guys this all the time, and all you have to do is search enough and you'll find videos on YouTube of people who do nothing but test different indicators and strategies. The majority of them are horrible when you follow their rules. I'm not talking about just average, horrible. Okay, they're really bad, all right? And then if you have to start putting all kinds of other things in conjunction with them, well, then you don't really need that indicator to begin with, right? There's a lot of people out there that say, well, I use such and such an indicator, but you also have to add this, and you have to do this, and you have to do that. Well, then if you got to do all that stuff, then it's not a great indicator. And I'm talking about for trading, not for scanning or something like that. They're taking trades based off of these indicators. I'm not into taking trades off of indicators. All right, you see it's coming back down. And actually, while I was talking there, it came down close again and then came back up. Let's see, we've got a little bit less than 10 minutes left on this candle. And I'll probably wrap this up here within the next 10 minutes or so anyway, because I have to get ready for an 11 o'clock call. So we have a nice group here today. Again, thank you so much. Appreciate everybody who's here. And hopefully what I was showing you there on that Euro USD chart, hopefully that's something that'll turn in to something that I can then, again, totally free, offer in my community. I can say, hey, we've come up with these scans based on such and such and such, and each day or whatever those scans can be run, and you can find high probability trades that have not occurred yet, right? Because if they've already occurred, they do you no good. Let me talk about that for a quick second. There's a lot of people who, this is the one thing about testing something. So I was watching a video, I don't know, might have been a couple weeks ago on the weekend, and it was this guy, and he was talking about a specific strategy, and he says, yeah, I saw this, this video, and this person's like, yeah, this strategy works 95% of the time, and blah, blah, blah. And he's like, I knew it was not true to begin with, because there's no strategy out there that works 95% of the time over a wide range of trades, right? It just doesn't happen. So he took it and he back tested it, and he was like, when I back test it, it does win a really, really high percentage of the time. So he started trying to implement the strategy in his trading, and he was only right about where he was with how he traded normally. And what he realized was when you're back testing it, everything is ideal, right? There's no emotion involved. When you test something on a computer, you have to give it parameters. And you're always giving it the ideal parameters when you're doing a back test. So when he was trying to trade that strategy in real time, it was not that effective. But if you back tested it, it did win 90, 95% of the time because the computer knew the ideal entry and the ideal exit. I hope you guys are following me. So you have to be careful too. When you back test something, it has to then be able to translate into you being able to trade it in real life. I hope that makes sense. I hope you guys are getting it, right? Because there's a lot of things that when it's back tested might have a decent or even high win rate, but you have to be able to trade it in real time. Like not knowing anything, you're not going to have ideal entries and ideal exits on every trade. Maybe once in a while you will. And so that's what this guy was getting at in his video was, and he was critiquing somebody else's video who claimed it was like a 95% winning strategy. And he was like, the first guy was like, yes, it's been back tested and this and that. And the guy was like, yeah, he's right. If you back test it, it wins a high percentage of the time. But when you try to trade it in real life, it does not. He's like, it wasn't any better than anything else that I trade when I was trading it in real life. Okay, so here we go. We're breaking down. We're breaking below the 3206. Okay, if we come back over here, let's go, whoops, I'm going the wrong way. Okay, let's see, do we have any levels below that have a lot of orders? Okay, we have 286. That's not a lot. Look, it's right here at an even number. Okay, what I was telling you guys before. They're frequently going to be at a round number. Okay, 3200, 3201, 3205, whatever. Okay, now price isn't even getting there. You see how it's bouncing before it gets there. Now this number's starting to increase right in front of our eyes. Okay, now it's going down. Okay, watch this number. It's still growing right now. We'll watch this just for a few minutes. And again, if it gets here and this number just all of a sudden disappears, typically what happens is price will start to drop. Okay, it's eating it up. Okay, you see that? It went from 400 down to around 300. Now it's going back up. Watching this number here. Okay, there. They just ate through it. Okay, you see the candle right over here. And we've got a little less than 4 minutes on this candle. This red line is low of session. This is the low of the session. And that low came at, what time was that? 4 a.m. Let's come back over here. All right, now it's trying to get below this wick. Let's see where this wick is. 38.9850. 38.9150. Let's go back over to the DOM. 31.9850. That's right here. Again, look at 31.98, whole number starting to increase. This is the bottom of the wick. Okay, it's at the bottom of the wick. Let's see if it can break below and keep going lower. Still struggling. This number right here is the bottom of the wick. This wick over here. That's the bottom. So when in my room, I frequently use terminology like break and hold. That's a level, or clear and hold. That's usually a wick. So for this to continue to go lower, it needs to clear, get lower than, and hold 31.9850. Come back over here. Okay, it's that wick right there. It's got to get below there and hold. Okay, you see that? It's got right down to it. Hasn't been able to get through it yet. Then we have the 200 confluent with the bottom of the range that we were in yesterday, pretty much all day and even through the overnight session. So that's the next obstacle, would be the 200 simple moving average. That's this green line. Watching price over here, we're back at the bottom of the wick, 31.9850, 25.50. Okay, couldn't get through again. See price waffling. See price waffling. It's got to get below this. Okay, still at 99, 98.75, 50, 25. Okay, here we go, 97.75, 50. Can it hold? Still struggling. Still struggling. 31.9850 is what it needs to get below and hold. Now it's all the way back up to 99.25. So it's already waffled a couple of dollars. It's already waffled a couple of dollars. It got down to 25, I believe. Yep, 97.25. Now let's clear up to 3,200 again. So far has not been able to hold, and now we're going to start our new candle. Okay, we're at 10:30 now. Now we're going to start our new candle. Jose, the second Jose, and welcome by the way. I'm pretty sure there's a DOM on Thinkorswim. I'm pretty sure. Most trading platforms have a DOM. That stands for depth of market for anybody who doesn't know. Some people call it the ladder. Okay, price is trying again. I'll stay with you just for a minute or two more, but I do have to jump off here and get ready for that 11 o'clock call. Okay, it's at 98, so it's below that wick over there. It's got to just keep going, and then the next, you've got the bottom of these candles, and then you have the 200. So if it gets some momentum going down, here's your next area that it would have to get through to continue even lower. We're at 97.50, 31.9750. Now it's back, it's vacillating again. 25. In fact, let me do this. I'm gonna move it over this way a little bit so you guys can see it a little bit better. Make the candles just a little bit bigger for you. Whoop, sorry guys. So it's really, really struggling right now. Really struggling right here. Okay, there we go. You see that it jumped about $1.25 in one jump. That's typically when you see price jump, and sometimes it'll jump $1. So I've seen it jump as much as like $4, like in one jump. That's typically it hit some stops. There might have been a bunch of stops at a certain number, and when they hit it, it just jumps price down. It can sometimes be anywhere from like 1 to 2, 3. Sometimes I've seen as much as like $4 in one jump. But I should say this, I've seen a lot more than $4 in one jump, but that is like an aberration. On one of our live streams, and I can't remember if that was a private one or a public one, because we used to do private ones for our premium members, but we did away with the premium. Everything is now free. There's no premium content anymore. But we used to do private live streams, and it might have been on one of the private ones and it was at the end of the day when price is heavily manipulated. And those who were watching it live, you know, they can attest to it. It was no joke. We were actually watching time and sales is what we were watching at the time. And that's actually the orders, the actual orders that are being placed. And it's just what it sounds like. Gives you the exact time and what the price was sold at. All right, that's your time and sales tape. Well, price was at a certain level, and it was waffling right at a certain level, and then all of a sudden, now this was back during the market correction when everything was absolutely nuts, and this was during like the last 10 to 15 minutes of a day, and price is very heavily manipulated. Price dropped $29 in one move. The candle just went whoop. It went from one price to $29 lower in 1 second. It was amazing. Now, if you were long, it wasn't amazing, right? If somebody was long, that's one of the reasons we don't trade, or I don't recommend that you trade the last 10 or 15 minutes of the day. And really, if you're a novice trader, I would avoid trading the first 10 or 15 minutes of the day. First 10 to 15 minutes and last 10 to 15 minutes are heavily manipulated. They're trying to flush out retail traders. They're trying to confuse you. Price will typically whipsaw quite a bit. And in that particular day, that's the biggest single move I've ever seen that quickly. On the time and sales, it went from one number to $29 lower with nothing in between. I mean, it was like, oh my gosh, we couldn't believe it. That was back when the market was correcting, and you know, some of those days price was moving, you know, $150 in a day. It was nuts. It was nuts. So, okay, I'm going to have to get off here in just a second, but you can see that price is struggling right through here. Doesn't mean that it's done, right? Okay, that could just be buyers trying to be aggressive and bulls trying to stop this downside momentum. Look at this. Okay, see how I showed you how you can see? Look, we just fell off a cliff there. So we went from about 64 on the RSI all the way down to 44 that quickly. Okay, that is a shift in momentum. And that's why you'll see I draw these lines on here. Here, look at this. Look at that. If you draw a box around that, it's no wonder that price was ranging. Okay, because momentum was flat. Okay, this is flat. Okay, it's almost like a C. I think I saw somebody talking about that one time. When you're using something like this for momentum, these are big crashing waves. This is just a gentle rolling C, right? Relatively flat. It's not going to be a straight line ever. It's not going to be a straight line. All right? But then here, that's like falling off a cliff, and it's no wonder that we see momentum going down. Now, just because you see a little uptick, that doesn't necessarily mean momentum is going to change and come back. It can, right? We could do a V right here. You can do that. But after this move, let's see if we can tell what this move was. 32.19, and it came as low as 31.9650. So let's just say 4 and 19 is 23. So $22.50. That's not dramatic, okay? But after we ranged for an entire day, a $22.50 move is decent, right? That's a decent move. So we'll just watch and see. Now, do we retrace? Do we retrace to 33%, to 50%, to 66%? You guys know the rules, right? If it only retraces the 33%, it's highly likely price will continue lower. If you get to 50, which it does about 70-75% of the time, it could go either direction. And if it makes it all the way back up to a 66% retracement, it's about 84-85% that you're going to continue on at least till the origin of the move. Right? Highly likely, but nothing's 100%. And I saw one the other day, and I should have pointed it out. I saw one the other day where price retraced to a 66% level. And again, the probabilities once it gets there is that it's about, just say 85 to make it a round number, it's about an 85% probability that you'll then continue back to the origin of the original move. And the other day I saw one where it didn't work. And it's the only one I've seen in a long time. because the probabilities are overwhelming that it'll continue on if it makes it that far. Even if it gets to 66% and bounces down, just like a pullback, and then comes back through. But I saw one the other day, and I forgot to point it out, where it got back to 66%, and literally it just turned around and went all the way back down and went lower. And that's rare. So that's why you can never say anything is 100%. Okay. All right. I've stayed on here longer than I planned, but that's okay. Good stuff today. Thank you so much. Everybody, please give us a thumbs up and subscribe to the channel. We're closing in on 200 subscribers for the channel. And if you have never been to our room, we're almost to 400 members in our room. Come to simpletradinglife.com, click on the free chat room button. Come join us. Everything 100% free, no strings attached. All the content, anything we do in there is absolutely free, and we'd love to have you. So if I don't talk to anybody the rest of the day, enjoy your weekend, and hopefully we'll see you in the room. We'll see everybody. Bye-bye.